Yo, 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 what's going on, boys? What's going on? Welcome back, welcome back. So today I'm doing the video, the trade recap, a little bit early in the day. So I just finished trading, and it's barely 10:08. I'm about to get ready to hit the gym and shit, but I live in Texas, so it's 10:08 over here, but in reality it's 11:08 Eastern time. So yeah, I'm done at around this time. So yeah, let's get to it, boys. Let's get to fucking it. Let me see. It's right here. I was just watching a little bit of YouTube. So today, let me also do this. So I pull out this shit. And so here's the trade I took today. I was just, kind of marking this one out, see what's up, how this could play out, and it's playing it out pretty well. But to get to the thing, because I know y'all, the attention spam you guys have is fucking stupid. Y'all can even watch a 10-minute video. No wonder y'all never become profitable, bro. Let me see. So today we had opening range set. We are below in the middle of the yesterday range, previous day's high, previous day's low, and um, let me see. So we are in the middle. We are inside yesterday's range. I didn't exactly know what to do with it. With if I wanted to lean into the longs and lean in onto the shorts, but what I was seeing was a potential short, most likely because I'm sorry, a potential long because of the how the opening range was set. So the reason I'm saying that is because so we had 9:30 from 9:45, so that's the low and the high, right? So then we broke opening range high. So we got an opening range breakout of the high. So most likely what I wanted to do. So and look at the BWAPs, right? BWAPs align. So bullish breakout, bullish VWAPs. Now, structure is not, another confluence to add to my trade because we are inside yesterday's range. We didn't break the high of yesterday, so we're not technically bullish. But I was looking for a long at least to previous structure, which is this high and this high. Okay, so what I did was uh, once we broke opening range high and retraced down here, I said, well, I'll wait for the top to the opening range, to the previous day VWAP or the New York VWAP or start of day VWAP, and from there I was gonna, look for a entry confirmation, which was a close above all VWAPs again and try to long. So once I saw price go down here and then boom, close back above it. That's where I took my entry. So my entry was, as you can see, let me move this shit, nigga. Let me see. I think it was somewhere around here. Uh, Stop loss here, and my TP was right here, but I ended up getting out at 29,121 right here. So that was my trade for today. Pretty simple stuff. So it was just a break and retest. So a break of the opening range high and a retest of all the VWAPs. I enter my long position. I don't know exactly where the bottom, where the higher low will be. So a higher high, higher low. I don't know where in this range the higher low will be. That's why my stop loss is at least right here. It could have come back all the way down, make a higher low, and then make a new higher high up into these highs over here, which we took and then reversed. So if y'all took these shorts, y'all are fucking good traders. But that was my trade, right? So once we got really close to it, I started trailing my stop loss, and this next candle fucking took me out, because of, and then eventually it even went up to this high, and so on and so on and so on, and that was my trade. So I made 148, and my account is back to positive to $70. It's a fucking evil. I know. If I want to get a payout as soon as possible, I need to be taking the trades I usually take, but with way higher risk. I'm talking about 5 micros at least in these market conditions where the ranges are so big. Like, look at that, bro. 400 point ranges, bro. 100 points, and I'm fucking, and my account is gone. So I have to be really careful if I just want to kind of like start learning how to trade these market conditions. in this strategy because I'm new to trading the BWAPs and market structure and book map and shit. So yeah, there were orders over here too on the book map, and everything was pointing positive at this point. Like if you are right here, like just look at that. Like everything is pointing positive. Opening range high. You got this high. You got this other high. You can't even close below the BWAPs. You got the rejection. It of course you're gonna go long stop loss here, and then next thing you know, like this shit just keeps on moving, and then you would have. So it made sense. Yes, sellers couldn't even made price retrace back to its VWAP. So like if you were waiting for it on ES, the tap you never got it. So maybe you never even entered your trade. So that sucks. Uh, and yeah, that's all there is to it. That's all there is to it. There's nothing else I can say. And the one I was marking out was let me see this one over here. So let me close this. So you see so only if you see this. So you see price opening range high, it starts making some highs but can't even get far away from the opening range high. It can get far away. So then price comes back, it does a double break. So it taps it once, twice, it breaks it. So you can see boom, goes below it, fails to make new highs, start making new lows. So you can enter, a short position right here, stop loss at the high of the session, and then you just target that opening range low, and you would have gotten your trade. So maybe as ICT concepts, inner cycle trader concepts, you can say so maybe overall the trend is bearish, right? We came up, this is a potential reversal zone. So we take, I think this is buy side liquidity. Yeah, you take buy side liquidity, and then you look for maybe your fair value gap and market structure shift. If you use the 2022 model, which I know that actually I know that from the past. So this will be your 2022 model. Or if you're waiting for a market structure shift, you wait for it to break this low, and then you get in short on the retracement and stop loss on the short. And if you are anticipating and want to capitalize from that move, I guess you take the first IFBG you see, which is this one over here, I would say. So you would take your short on that candle close, stop loss at the high, boom, stop loss at the candle close, and then you target opposing liquidity. I guess you target this, but then you go break even at this low, some shit like that. So either way, I think all that matters is it. Of course, it matters how you see the and how you analyze, how you do your technicals. But all it matters is what's your entry price and what's your exit price. That's all that matters, I guess. Because what else is there is to it? The better price you get and the better exit price you get, the more money you'll make. It's simple as that. So if y'all have any comments for me, anything that you guys think I could improve, uh, please let me know in the comments, and I'll gladly read them and see, if I can apply them to my trading. And if not, then just follow me, fucking hit that like button, shit, so I can get famous, boys. Thank you for watching.